Good morning, traders. Happy Friday and welcome to the Showdown. If you guys are brand new to the Showdown, here in this session, we do some live trading on Forex pairs using our Smart Entry AI tool. And we're going to show you exactly how we use that tool and how we implement those trades. I also have FxBigDog joining today to go ahead and let's do some trading and talk about NFP this morning. So, if you guys are ready, we're going to go ahead and start right after this. All right. Good morning. Good morning. How's everyone doing today? I'm going to go ahead and share my charts. We do have Big Dog joining us. He's just running a couple minutes late, so I'm going to get us started. Give me 1 second. All right. Let's go ahead and pull up my screen. I have a couple of trades running here, so I just want to have a double screen here. So just give me 1 second. Okay. All right. Let's see here. Let me get this right. Nope, that's not. I gotta take this off. All right, there we go. All right. All right, welcome back, guys. Welcome back. Good morning. Big Dog will be joining any second here. We're gonna take a look at what we got going on the charts. Let me pull up our dashboard here, or sorry, not dashboard, but our pairs. We got the CAD Swiss and the USD CAD still holding. So USD CAD still holding strong. We didn't really get much moving here on the USD CAD. We did have a little bit of a run to our new daily opening gap from yesterday. We rejected that area. So still waiting for some. Let me take this off here. Still waiting for some movement to the downside. Okay, we're still waiting for some sort of correction. We can see here going to the daily. We are hunting in areas of buy side liquidity. If you zoom out here, you can see we have resting buy side liquidity above, and we're kind of expanding to that area of liquidity. So understand that we're hunting buy side, but we did have this huge expansion in the market. We're still waiting for some sort of correction, some sort of rebalance, or some sort of manipulation to come back to sweeping areas of sell stops. Okay, we have a lot of buyers in the market that are holding their sell stops below this low resistance liquidity. So we'd like to see some sort of manipulation to the downside. But we're not getting any change of delivery here, state delivery to the downside. We can see that, again, we had that news NFP bringing price to this area that's holding as support here, this new daily opening gap on the 30th from yesterday's opening gap, and we've rejected out of that area. So again, we're really in an accumulative stage right now. Nothing really going on with the USD CAD. Now the Euro USD, which I'm going to go ahead and take a trade on. If we look at the Euro USD, here we had a nice expansion, daily candle closing above this swing high, giving us now a change in state of delivery to the upside. We can see we've created this bullish breaker. Okay. So price is now running towards this into this breaker. Okay, this is an area of liquidity. Okay, sell stops resting in this bullish breaker. Price will run these areas of sell stops to push price higher. So what do we see here on the external model here? We see that we've had this expansion lower. We swept this external sell side here, rejected, didn't close below that. We kind of rejected, sweeping that area. We've created this low resistance liquidity below. So I'll tell you one thing, okay? Looking at this external, one thing we see is low resistance liquidity generating below price, okay? We do see a volume imbalance here as well. We have this weekly insufficiency that price ran into, sweeping that sell side and then rejecting out of that. So I'm pretty bearish for the longevity here of price coming back to these areas of generate sell side liquidity. Okay, low resistance liquidity. So, but what we see right now, we see some sort of shift in price action right now. Okay, we've created this insufficiency and we've shifted above this order block, creating a breaker block. So to me, this is now where we can start anticipating that price might want to rebalance a little bit here, run into areas of buy stops. We have these swing highs, and we have this breaker, this bearish breaker as well when we expanded below that. So there's areas the price want to go ahead and run to as we swept this buy side and we expanded lower. I would like to see this price leg get rebalanced back to 50% equilibrium. Okay. So still not receiving any displacement out of this breaker. We go to the 1 hour here. I can take some of this stuff off here. Oops.
Good morning, Cam.
Oh, good morning, Big Dog. How you doing?
Good. Hey, so traders, good morning, everyone. Trust everyone's having a good week so far and looking forward to the weekend. And we just had, while Cameron's busy breaking it down there, we did have some news that came out this morning. It was the jobs. I don't know if, Cameron, if you've covered that, non-farm payroll.
No, I haven't covered it. Just kind of went on the just looking at the USD CAD and the Euro USD and seeing the reaction that we had this morning.
Yeah, it was pretty wild because, I mean, if you look at the jobs report, jobs came out at 12,000. They were expecting 106. So they did expect a lower number out this month. And it actually came out shockingly lower at 12,000. Now, traders, again, if you look at the previous numbers, we got once again revised numbers from 257 to 223. So again, this is what I keep saying every time. You know, somebody's fired because you're not getting consistent numbers coming out every single month. It's just unbelievable. We talk about price manipulation. Now we're talking about data manipulation here. It's just they don't seem to get it right every time. And it seems to be a consistent thing here. But we did get the numbers. And the numbers that came out much lower than expected. Unemployment rate hasn't changed. That's been pretty stuck and consistent. We also just got ISM manufacturing PMI numbers as well. That came out lower as well. And traders, this is just a knee-jerk reaction to the market. This is not going to be setting the trend. But certainly this is going to be something that the Feds are going to be looking at, because keep in mind that the Federal Reserve is constantly looking at data such as the jobs, inflation, housing market. All of this data is what they use to be able to identify whether there's a problem that needs to be resolved with interest rate hikes or cuts. And so what we're looking at here is we're looking at data that's important, but again, it's not the only data that the Feds are going to be looking at. Now, we do have, of course, a very important week next week. We got the U.S. elections, and so far, according to the polls, it looks like Trump is looking to possibly win the elections this way around. There's a couple of things here that you have to pay attention to. Back in back in 2020 is a good reflection, and 2016 is a good reflection of what we saw in the market when Republicans or Democrats win the race. And so it's really going to come down to, are we going to see the same reaction we saw back in 2016? Or is this going to be just another 2016 move where we're not really getting the market to do something? Now, both times, Democrat, Republican, it doesn't really matter, but both times, what we did see is price manipulation during the election, and then about a week after the election, we saw a change. Maybe sometimes, in fact, you can say a week or two after the election, we saw a change in that move. And so, it's interesting that Cameron's talking about the possibilities of a sell-off on the euro US dollar, because it is true that this could be a lead up to the news next week, and then we could see something happening that could be ultimately changing the momentum. Now, it's not just the elections coming out on Tuesday, but we also have the news coming out with the rate decision coming out on Thursday next week. Rate decision for the U.S. And I don't believe that there's any indication yet. Normally they do set up something. Oh, actually, no, I lied. There is an indication of what the Fed's going to do, and is actually at a 25 basis point cut. So the Fed's are going to cut interest rates another 25 basis points. So traders, I don't know. And Cameron, I think weaker US dollar with a rate cut, even if it's just a weak move, I think we might see the euro pushing up a little higher before it goes ahead and sells off. So continue what you're doing right here, and let's take a look and see what your scenario looks like from a technical base.
Yeah, and that's pretty much exactly what I was just saying. I am expecting a short-term move to the upside. I'd like to see a rebalance of equilibrium, internal liquidity in this breaker. So I'd like to see price run higher before running lower. And as you can see, we're creating this low resistance liquidity. So I think we're now due for a correction for price to then come back and target this low resistance liquidity. And you can see here on the daily, we've kind of had this displacement above the swing high, creating a breaker block here. So we
Yeah.
see a little bit of change in state of delivery to the upside.
Yeah.
So I am anticipating that there can be a short-term move to the upside, and that's probably what I'm going to be taking today. Looking at this, actually, what was I looking at? The 1 hour? Yeah, I was looking at the 1 hour. Yeah. And as you can see here, he has all this generate buy side. Okay, so we have all this generate buy side, low resistance liquidity up top. So this is where I want to see price run all this low resistance liquidity, coming back into this breaker and equilibrium as well, targeting these areas of price action of this premium array. Okay, so I think that we are going to see a short term move to the upside. I'm liking what I'm seeing right now on the 4 hour as well. Yeah, you can see price expanding above that high on the daily high. We had this order block here that was created. Price never traded below constant encroachment. We respected the upper quadrant, displacing again above that insufficiency. So we are starting to get a bearish candle to the downside here. So looking for where is this bearish candle running through? Because it's running through this breaker on the 15. Okay. You can see here we had
We
news
haven't
from
closed it. Oh yeah, no, sorry, yeah.
we had that NFP news that created this candle right here.
Right.
And then we have in price kind of run lower. So here we have some insufficiency here that price could run all this sell side, generate sell side here. That's a possibility if we kind of break through this, which it looks like we are. So going to the 1 minute again, yeah, you have this right here as well. This 1 hour insufficiency. We had price just tap into. This is institutional order flow drill where we had that run to the upside. Came back, another run to the upside. So again, let's look at our new weekly opening gaps here. We can see we're trading into our previous weekly opening gap, okay, from last week's weekly opening gap. And here we have this new daily opening gap as support. So where price run to this candle wick here? Right at that new daily opening gap. Okay. So possibly we could reject from this area. If price wants to run below, then we're looking to run these areas of sell side here and possibly come back into this insufficiency again.
How far
But
is it down?
I am expecting that we're gonna see some short term movement to the upside, like I was saying, before we run back to that low resistance liquidity below. So I'm gonna take a short term buyer, and as you can see here as well, okay, coming back to that's about 30 pips to that high and about 47. So we have some room. We're targeting only 20 net pips to the upside. You can see the new today's opening gap price wanted to run above it, and we kind of closed back and we displaced lower. So I think we're going to run back here to this area and higher. I'm looking for a short-term rally and then possibly seeing price come back lower.
Now, traders, there could be a little bit of a push to the downside first before the rally takes place, just to because I'm seeing a little bit of range bound trading here, and that might be just in the manipulation move. Because I believe that every time I see the market moving so a little sideways, we tend to have manipulation first, and then the price moves in the direction of the trend. And so I could see that Cameron mentioned those lows down there below. And I believe that, yes, we could go ahead and sweep the lows and then push back up north. So a push to the downside and then a continuation of that move to the upside. We've been talking about and you could go ahead and put a chart, take a chart and put an indicator on a chart, put a 200 EMA on your chart. And when you do that, you'll actually see that the 200 EMA is just a little bit below those lows that we're talking about. And so that's what's going to drive and push the market in that direction. Let me go ahead and just share my screen here a little bit, and you can see what I'm referring to. And there it is there. Check this out. Here's that purple line, which is the 200 EMA. So you can see right here that price is going to go ahead and just push here, touch that, and then off it goes. We are starting a new trend here on the 1 hour time frame. The trend here is starting to bend a little bit and move and point north. And so this is just once again, and if we talk about Fibonacci's again, which is also something that I use a lot, we'll see over here, if I put my fibs from the bottom right here up to the top, oh, hang on, let me try that again. Put the fibs down here, the bottom to the top right here. And what did we just experience here? We just experienced a 1.618 extension that is being hit right here to confirm that we're now in the next swing from here to up here. And so this is a fourth wave correction move that we're looking at right here. And a lot of the times when price goes ahead and rejects the high, doesn't get to the 1.27, we tend to see price come back down, clean up the lows right here, and then start moving back up north. And so this is called a irregular flat pattern. It's typical, and we've seen it a lot. And this is going to happen. Price is going to drop back down here, pop here a little bit, and then start rallying back up north again. So again, even though Cameron's gone ahead and entered into the trade right now, it doesn't necessarily mean that you need to follow suit. You know, if you do see that, okay, price could pop down a little bit lower, you could always say, well, I'm going to go ahead and enter on the second trade that we enter on, or wait for the market to drop back down to a certain level and go ahead and bounce off that and enter then on the bounce. Those are options that you have. So again, just to be clear on this, not everything we do here do you need to follow exactly how we do it. All we're doing is just saying, hey guys, listen, this is how we see it. This is what we're looking for, and this is the way we're going to go ahead and trade it. And based on that, we will then obviously manage our position accordingly. The bonus that we may find here is that if the market does go ahead and bounce off that level, and we have already entered in a trade, which means we pick up a second trade. That means that traders, that if the market does this, if the market drops back down, something like this, if price drops back down here and sweeps the lows, gets down here, we may end up having a second trade. So Cameron's got his first trade in here. He picks up his second trade. Guess what? We don't need to break out of this consolidation, all right? All we need is price to go back up to the first entry point and we're in the money. So if the market's going to be range bound in today's trading, we're still going to come off on top. And that's ultimately the sort of the idea of what we're looking for. We're always looking and saying, hey, what's the downside? And we always have to consider the downside. What is the downside? And then if we are getting into multiple positions, how quickly can we get back to our break-even point into profit from that level? And so it's important to identify what the bias is going to be for that day, that week that you're trading, so that if you are wrong, you can still be right. And that's the important part right here, is being wrong but right. And so this is what we're going to be banking on possible dip and then a rally. And either way, we're still going to be making profit on that. In fact, if we can find a trade that can go ahead and dip, pick up two positions and rally again, it's quick in and out. And you're probably saying, well, Big Dog, what if you just sold? Then if it drops back down, you're out of the trade. You don't have to wait for it to come back up again, and you only got one trade that you've traded. True, but if the market does not go down, then we're going to be stuck in something we're going to try and get out of when we're against the trend. So we're always trying to make sure that we're in the direction of the trend. Now, if you follow our trade ideas and you realize that we're short on US dollar CAD, you're probably saying, Big Dog, hold a second. What happened to the US dollar CAD? This thing's been rallying over the last couple of weeks, but yet you've been selling. What's the deal? All right. So the thing here is that you have to understand is that when we initially entered the trade, it was set up for a continuation bearish move. Support held, didn't break through, price reversed. We said that's okay. We're going to look for an exit point. The market does not give us an exit point. If the market does not retrace back, if we see prices continue to rally and you don't see any correction, it's very difficult to go ahead and close out with profits. All right. And so that's the deal with the US dollar CAD. And so it doesn't mean because we're selling something and we've got multiple positions is that we got it wrong the first time. No, the first time we had the right trend, the right direction, the right bias, the market had something different. And that's okay. It just didn't give us an opportunity to get out of that trade. But we are working, and I believe we're going to find some good profits on that. If you are trading that US dollar CAD position, I think we're going to see some good profits on that US dollar CAD in a very short time, probably going to be in next week. So we'll see how things play out, depending on the elections. But I think we're going to be pretty solid and pretty happy with that trade. All right, let's move on to the next trade, Cam. Great job. So you're long on this one right here, right?
Yeah.
And is that the first currency pair you covered?
I just covered the USD CAD and the Euro USD.
All right, cool. All right, well, let me go ahead and cover what other pair can I go ahead and look at?
Aussie CAD and New Zealand CAD.
All right, perfect. So Aussie CAD, let's go to the daily time frame here. And let's look at Aussie CAD. So I just gave it a little bit of an indication of what I'm expecting here. I drew in this trend line going across right here, and I said that traders, and this is something that we've been discussing inside my hybrid trading room every week, is that when the markets are creating a retracement move. So let's say we have a move something like this. Okay, what I really want to look for is a trend line break to confirm the trend is going north. So I always want to look to trade the right side of the trend. But when I'm looking in this area, this retracement area, what I'd always like to look for is manipulation, right? Whether the market consolidates like this, right, then manipulates and then goes north, I'm always looking for that manipulation. I believe that when you find the manipulation move, that's probably the true indication for entry point. And the same thing would apply if you're having the market doing something like this. It rallies up, comes down, goes up, pops down, then goes up. So it doesn't have to just be in a range, but there's always this last low that it takes out. When it does that, then we continue to trade in the direction of the trend, all right, that we believe the trend is in. And so with that being said, if I go back here to the chart right here, and I look at this and I go, hey, take a look here. Price is moving up. All right, there's a low, there's a high, there's a low. Now we go into this retracement. This is a retracement move, right? And take a look right here. Price goes down, goes up, and now we pop below here. Takes out the lows. This is what I recall. This is what I'm anticipating is the manipulation move below the low right here. Because a lot of traders would probably start believing that, okay, we get support here. Let's go ahead and buy here. Put our stop losses below here. So I always look at this as price manipulation to clean up some stops and then going ahead and moving back up north. Now, I'm going to say this though. If I look at my oscillator down below, all right, I don't see us in an oversold condition. So I'm not heavily convinced about this. I'm not convinced that price is going to continue to move down. To move up. All right, I'm not completely. There's two things. We're not in an oversold condition, nor do we have price trading above the trend line. So which means that there might be some further push to the downside. Now, I do see, though, that we have an order block sitting over here. There it is there, a daily order block sitting over here. And price is respecting that order block. And so I'm going to go down and take a look at the lower time frame and see if I can see a change in market structure, just even if it's just short term for a 20 pip grab. All right. I do want to stay on the buy side. All right. Which means I want to be on the right side of the trend line. I want to be bullish on the Aussie CAD just because of what I'm seeing here on structure. But let me see here if I'm maybe getting this one wrong. I'm going to go down to the lower time frame. Here's the 1 hour. And there it is. Actually, let me completely clean my charts up here and do a complete clean housekeeping here. Traders, where's the 200 EMA? The 200 EMA is sitting over here. All right. So if I go back here and I look at my logic says here that we hit this order block. We did not trade above the trend line. We have not got into an oversold condition yet. So everything is pointing that the market's still pretty much bearish. If I go to the 1 hour time frame, it does confirm that. We're below the 200. So we're not quite ready to start moving north. Now, I could be wrong with this and price could eventually break out here. But according to this, I'm going to say that the Aussie CAD is actually set up bearish here. So what do you think I should be doing? I think I should just still continue as long as it's in this on the left side of that trend line. Even though we hit the order block right here, I don't have conviction on my lower time frame to go ahead and start buying long. So Cameron, I'm going to go short on Aussie CAD. And with that being said, traders, for those that are following my trade ideas, I'm actually going to look for some shorts on the Aussie CAD right now as well. And then the same thing is going to be applied to the New Zealand CAD. Let's take a look at the New Zealand CAD. I'm going to cover that as well, Cam.
Okay.
New Zealand CAD, here we go. Notice we are seeing respect here with this daily order block right here. Price is tapped into a few times. You can see here the market never broke below there. I don't see us in an over. Now, that's not the only thing that I may pay attention to, but I can see we haven't moved into an oversold condition yet. All right. Now, because of that, I'm always going to be thinking that there is a possibility that we're going to see price manipulation here first and then a rally to the upside. All right. There's that possibility. Now, I said order block, I mean a fair value gaps in over here. So what I'm going to do here is I'm going to look here at my lower time frame. And I'm going to take the lower time frame here as an indication as to what the price may want to do here. So if I look over here, what do I see? I see price above the 200 EMA. Okay, so that's a little bit, I won't say it's a concern, but that's something that I'm paying attention to right here. Okay, price is above the 200 EMA. And if price is above that, then I'm going to go to this right here. See support there, see resistance up here at the top of that fair value gap, daily fair value gaps in over there. I got equal highs All right. Let me see if price goes ahead and takes out that low there. What does that price action move? 20 pips. So that means that traders look at the blue ribbon. Blue ribbon still below the red ribbon. So this is just price manipulation according to what I'm seeing right here. I don't see the confirmation on the daily time frame. I'm going to put a trend line in here. Oh, there we go. Actually, we do see a little bit of break of that trend line. No, actually, no, we don't. We're right at the trend line there. So because of that, traders, because of that, we don't have a confirmed breakout yet. I'm going to go ahead and short New Zealand CAD as well. So let's go ahead and short New Zealand CAD. And I expect price to go ahead and move bearish for a short period of time. Now, let's see, this could this mean some strength out of the Canadian dollar itself? All right. Could this mean some strength out of the Canadian dollar? Well, we've just seen the Dow. If you haven't looked at the Dow this morning, Dow's starting to rally. Okay, so we're getting the push in the Dow. Now, if we're going to get a push in the Dow, that means a little bit of risk on. On a risk on, what tends to rally? The Canadian dollar tends to rally. So you may get some strength in the Canadian dollar, but also the New Zealand and the CAD tend to rally. So could that be maybe some sideways range-bound trading? Well, possibly. Let's take a look at the price of oil. Let's see if oil prices are starting to change market direction here. Let's see here. Let's go. Yeah, oil. It looks like we're getting a little bit of resistance held in over here. We've had a couple of days of rally here in oil. Let's go down to the lower time frame. And on the lower time frame here, we do see a little bit of a correction move in oil. Now, oil's still trading below $72 a barrel, which is not very favorable for the Canadian dollar itself. But it is telling me that we're starting to trend north. So this might be a dip for the next rally in oil. So I would be expecting oil prices just to maybe start swinging. And let's see over here. Yeah, we can see that we had accumulation, manipulation down here, and then distribution back up here towards this area. So we can see a little bit of a pattern appearing here. All right. Here's accumulation. There's the there's the accumulation. There's the manipulation. Here's distribution back up here, and we're looking for price to come back up here, retest these highs. And so this right here is starting to show that we've got a high. There was the low. Then we broke the high. So we have a market structure change, right? Then we saw price go ahead and rally. We see new highs and lows being created right here. And all we see now at the moment right now is just a sweep of the low and then a continuation towards this area. So we're probably going to get price above $72 a barrel by, let's say, close of day, or maybe by the start of next week. So a stronger Canadian dollar may be favorable in the push of the price of oil. So I'm going to expect that oil price is going to continue to push up higher to around about $72 a barrel. And if that happens, then yes, we can get a little bit of a bullish move or support the Canadian dollar and push a little higher on that. So I think my trade should be solid. Let me just take a look over here. Yeah. All right, cool. All right, that is pretty much it on those pairs. All right, so let's just go ahead and quickly I just go ahead and run a video here quickly. Cameron, just go run the ad. Traders, if you're looking for a broker, check out ACAP. Are you running it?
I mean, yeah, you did so quick, but here it is, guys.
All right, cool. Alrighty, all right, guys. Let's see. If you're not following us on social media, make sure you go ahead and do that. Check out the social media pages. Twitter, Instagram, the whole shebang, especially the Instagram channel. We're a little more active on the Instagram channel, so go ahead and check out Instagram channel FxBigDog as well as Traders Network Club. We're going to be pushing out something next week, Monday, that's going to give, and we mentioned it a couple of weeks ago, free access to our trade ideas. Free access to our trade ideas. If you want to know more, make sure you go ahead and follow us on Instagram, and you'll get some more details on that as we start pushing out things next week. Free ideas to our trade ideas. Now, it's not going to be for everyone. I get that part, but it's going to be available for those that are that do qualify. So make sure you check it out. We've got some free trade ideas coming for for the people that follow us on social media. So check that out. Social media. Go ahead and make sure that you go Google FxBigDog, or even the go ahead and Google what X. I was going to say Twitter, but it's X, and YouTube as well. Make sure you subscribe, share, like, all that good stuff. All right, traders. Hey, Kevin, I wanna go ahead and close off for those that stuck around. I want to close off a little bit of futures trading here. This is something that's coming down the line that we're building into. Do you see something happening right now in NQ? So listen here, by the way, if just FYI, traders, futures trading is a very unique sort of asset to trade, and the returns are just unbelievably huge. But there is also a huge risk as well. So I want to just go ahead and point that out. That even though futures trading is very exciting and it's very profitable, I want to also make sure that you also understand that not only do we have good opportunities to be able to trade futures with a higher reward, but also there is definitely a unique way to actually trade it. And I'm going to go ahead and give you some updates on that right now. Come, let's jump into some futures trading right now.
Okay.
So I'm going to go to go ahead and pull up NQ here for a minute. And traders, there are certain days that you don't want to trade. There are days, and that's where Cameron has really shown some great qualities as a trader to be able to step in, look at the markets, and then step aside just because the markets aren't setting up. So those are things that are important to note as a trader. So Cameron, I'm going to throw it over to you and give us a little bit of a look on NQ there.
Yeah. So right now, I'm just kind of waiting for a rebalance to this 5 minute insufficiency here. I'm expecting price to run to yesterday's first presented gap. This was unfilled, and our opening range was unfilled. So you can see from the 9:30 open, we created this opening range gap from the previous day at 4 o'clock, right, at 4:14. So that is the opening range gap. And if you don't know how to find that, you can always just switch it to regular trading hours, and that's that gap that price creates. Okay, so that's that gap that price creates during those regular hours from to 9:30 opening. So we are looking for this to be an area of price to draw to. Okay, same thing with the first present gap that was unfilled after that 9:30 opening. So what I'm looking for is, if I want to be bullish, I want to see price come back in. And there was really not much trade after the 9:30. It was probably better to trade before the 9:30. We just had this huge expansion move, right? And a lot of traders that get into trading for the first time say, "Hey Cam, why didn't we take this big move? Look how much money we could have made on this big move." And that's just not the way you want to be thinking when you're trading. These big moves are not moves that you're going to be catching all the time. Okay, so there's no setup to this price action. We had just an expansion. So most times when you see this, there's really no trade. So what I'm looking for now is a rebalance to this 5 minute. And if price wants to hold this area, we might see a candle wick do some damage to this order block here. I'm waiting for a shift to the upside. So what I see is now price running to this 5 minute. I would go to my 1 minute, and I would look for some sort of internal. What we're going to see is price come back here. It's going to generate some buy side. It's going to do this. It's going to generate some buy side. What we want to see is that change in state of delivery to the upside, where we see some sort of insufficiency or some sort of discount array that we could use. It could be however you're comfortable with. I mean, if you're a new beginner, you can stick to one. Some like to just use fair value gaps. I'll either look at fair value gaps, breaker blocks, order blocks, anything like that for my discount array. So once we've had this kind of shift to the upside, then I can go ahead and target, and I would be looking for this first presented gap to be my first TP, my first partial, and I'll look for price to run back to this opening range, okay, where we have that USO sell side liquidity. You're at this 930 candle, okay, so right here would be a key area of sell side liquidity right here. So that is pretty much what I'm looking for right now on NQ, okay, is just waiting for this rebalance, which we just received. Price has just delivered this. And now I'm looking for some sort of shift to the upside, which could take some time. We could continue to manipulate traders thinking that we're going to run higher. So we'll probably see price run higher. A lot of traders think, oh, we're bouncing off a 5-minute fair value gap. We're going to buy. And it's just a manipulation, right? Just letting price generate buy side, waiting for a obvious shift to the upside. And look for to get in to
Yeah.
if we do get that set up, most likely, with the election coming up, most likely it'd be best to just sit back and just watch the charts and not really even press any buttons at this point, to a prior election. So we'll see if we even receive this information, because we've also had this morning. That's why I'm very neutral in my bias. We also had this morning, we had our first presented gap that was unfilled with our opening range gap also unfilled. Okay. And what we have? London low. Price came back, created a higher low. So we could see a reversal. And that could be another possibility if price delivers a reversal to the downside, that this London low becomes a key area of sell side liquidity that I would be hunting.
Now, traders, I want to just point out something here, and this goes to trading any asset class when it comes to technical analysis, right? It's like, it's never just the case of like I'm just going to sell or I'm just going to buy. Specifically, if Cam talking about, hey, the market could still go ahead and dip down or even rally up, it's not a case of just going ahead and buy and just going ahead and sell, because what you're doing is you're creating bad habits. And so that's the issue there. It's the habits that you're trying to achieve here. You're trying to apply good habits, because you could go ahead and just say go ahead and buy and make money on that trade. And you go, well, you see, I was right. I put a buy in and I made money on that. But it's not the sort of habits that you want to start creating, because whatever habits you create, you're going to struggle to get out of those habits. And if you start creating a habit that's not consistent, then what's going to end up happening is you're going to start becoming not consistent in your trading. When you build up consistent habits, good consistent habits in your trading, then what's going to end up happening, you're going to start learning discipline, start realizing that, hey, it's not about just getting in. It's about allowing the market to set up the pattern, right? To set up the buy or the sell, not just to go ahead and buy and sell. It's got to set that up. So which means you've got to wait for that to happen. You've got to wait for all of this stuff to happen. And this is why most of the futures traders move down to a 5-minute, 1-minute, and even a 15-second chart, is because they're not going to sit there the whole day waiting for this thing to happen. They will sit there for an hour, 2 hours watching the markets and trying to wait for the setup to develop. But also they know that they've got what they call macro hours, and they know that if they trade during those macro hours, they're going to get the volume that they need, that they don't have to sit and watch the screen all day long. And so because they're watching the markets over that period, they know that this is the hard time. Now, you might go ahead and start looking at the markets about 8:30 in the morning and only get in on a trade at around about 9:30 to 10 o'clock. But at least they know what sort of bias they have and understand what they're looking for. And if they don't get that setup developing, as an example, if I was, as an example, looking at the markets right here on my chart, and I said that, hey, I'm looking for a king's crown to develop, right? Now, do I just go ahead if the market does this? if the market goes in and creates this crown like this, and it goes up to this point right here, all right? So here I've got my left tip, there I've got the center. The market's creating a crown. If the market has not gone ahead and taken out that high and has not come ahead and moved down south here, I don't have a trade. So do I trade here with a King's Crown? No. I've got to wait for the pattern to complete. I've got to wait for structure to set up. And the same thing if I was trading a wedge. Do I trade the wedge when the market's inside here or inside here? No. The wedge, you wait for price to break out. Then you wait for a return and then you enter. I've got to wait for all of that to happen. Traders, it's no different. Remember, you're trading price action, and price action has got to develop something for you to be able to get in. Trading before that happens, all right, it's just pure negligence, and it's creating bad habits. And so even though you see a wedge here and the anticipation is price is going to break out to the north side, don't get in early on that, because that is, again, breaking rules and trading bad habits. And by trading bad habits, it's going to put you into trouble, which means that you're never going to find consistency unless you have a consistent rule set that you follow and stick to that in, day out. All right. Every single time it's the same way. All right. So understanding price action, understanding markets are very important. All right, Cameron, thank you. Appreciate that. All right, traders, that pretty much wraps up the session today. Hey, listen, we're not sure what we're going to be doing next week with regards to the news, but make sure you subscribe to our channel, because if we do start going live on to broadcast based on price action moves, based on the news, and I'm talking about election, talking about the election, talking about the rate decision coming up over next week. Make sure you subscribe to both channels, FxBigDog channel as well as to the Traders Network channel. We're going to be definitely doing something next week. We don't have anything planned out yet. Make sure you subscribe, so if we go live, you're going to know about it, all right? And then also click the notification bell. Make sure you check the notification bell, because when we go live, you want to be notified that we're going live so you don't miss out on that opportunity, because a lot of times these live sessions that we do, if you're not participating in the live session, sometimes watching it after the fact may not be as effective. All right, make sure you guys subscribe and click the notification bell. With that being said, traders, this is FxBigDog wishing you peace, joy, and successful trading. Until next time, happy trading, guys.